and Susan Li on customers buying and buying and buying no matter the price. We begin. Susan.
Well, that's because Americans are doing their Christmas shopping really early this year on fears that there won't be enough supply closer to the holidays. And that's one reason why retail sales jumped 1.7% last month. And that's higher than economists forecast, also a third straight month of gains. And that shows that shoppers are willing to absorb higher prices, with inflation running at its hottest in 30 years, skyrocketing at the fastest pace since 1991. And despite prices going up, Americans are still buying online, and that price inflation is also what's boosting this retail jump, with spending on gasoline, electronics, appliances, groceries, and autos up in dollar terms, at least in the month of October. Now, you also have Americans buying their Christmas gifts really early, and that's because they're concerned that the supply chain crisis will mean they won't be able to find them later on. And that was echoed today by America's biggest retailer, Walmart, this morning. And Walmart says that FOMO, fear of missing out on gifts at least, helping lift their sales and their bottom line. And you had Home Depot also reporting a big U.S. sales jump of 5% plus. Now, both of these retailers complaining about supply chain concerns resulting in longer delivery times at Home Depot. But in Walmart's case, the supply chain, the backlog means higher transport prices, while inflation on raw materials means that Walmart is making less per item sold. And that's why you saw the stock fall today during the market session. And that's despite signs, by the way, of a really strong U.S. consumer that's still willing to open up their wallets, Neil, even if they have to pay more.
Susan, if you could just stay right there, I want to get a discussion going on the importance of what you just reported here, because it does stand out. Normally prices go up. Customers run away. I've always said that inflation stops when we stop doing that, when we stop paying these higher prices, and that does not appear to be the case. Joining Susan, Catherine Rivera, the Baltic Capital Markets Chief Strategist. So, Catherine, to what Susan was just reporting, this notion that the customer is resilient, or it might be just very, very savvy, trying to buy things now that he or she knows are only going to go up in price later. What do you think is going on?
That's absolutely what's going on, and that's correct. It's been front loaded. So holiday shopping is happening right now because everyone knows that you got to get that doll before it's sold out or before everyone else takes it. The fact is that there's a lot of shortages. There's a lot of lead time because of the supplies and the supply chain disruptions due to the pandemic. So I wouldn't say, Neil, that this is going to be an ongoing thing, or we can expect retail sales to continue this strong if inflation remains above 6%. As Susan said, that's a 30-year high. Nestle just came out saying that costs higher than 5% or increasing in prices higher than 5%. People start to change their methods of purchasing. So certainly if inflation continues, you should expect consumer sentiment to continue to drop. We saw in November, Neil, consumer sentiment plummeted, and that was because of inflation. So as costs go higher, you should expect the consumer to feel the pain and to stop buying.
You know what's interesting, Susan, too, when you pick apart Walmart's numbers, and what I like about looking at Walmart is it's over a quarter. You could take not just month-to-month gyrations, but overall sales comparable to the exact stores a year prior, up more than 9%, 9.2%. Further, traffic in the stores was up 5.7%, and spending was running up about 3.5% more over last year, even with the higher prices, at that kind of a clip. So that tells you that there's this pent up, desire to spend when people were kind of frozen in place during the pandemic, improve their balance sheets, but they apparently have the wherewithal to keep this going.
Yeah, and also don't forget e-commerce with people spending online also went up, and that was a tough compare to last year when people were stuck at home during COVID. But here's the problem with Walmart, as I reported to you, is a stock drop because of what they call squishy margins, meaning because of the backlog, the higher transport costs, and the raw materials going into each and every Walmart item. They are making less per item for Walmart, and that's a big deal when it comes to what Wall Street is looking for. But, Walmart itself, I would say, is being padded like the rest of the U.S. economy by the fact that you had $2 trillion in household savings, and that comes from those stimulus packages that we've seen. And eventually, though, that will run out if you're still paying 6% and the highest inflation and price increases in 30 years.
Catherine, the administration has been using the half full glass line that this is all happening because people are in a good position to buy, they're upbeat and all of that. Now, some of the consumer sentiment surveys do not bear that out, that they might have been upbeat a couple, months ago, but they're not as upbeat. So that could be waning a little bit. So play out not only the rest of this holiday season, but into early next year. What do you think happens?
Yeah, consumption is 2/3 of the U.S. economy. So it's very important that if the economy is going to continue to recover, that's based off of the U.S. consumer. Inflation digs into purchasing power. So if you're making X amount of money, inflation eats into that. The higher the inflation, the less bang you get for your buck. So inflation is very problematic to the economic recovery. It's been great so far, Neil, because we're coming out of a massive recession where the economy de facto closed. So this is certainly a V-shaped recovery, an explosion of consumption. People are coming out ready to go to the restaurants, ready to go on vacation, renovate their house, do all of these things. But the risk here is that the Fed is way behind the curve on inflation and perhaps increases rates too late. So we have record high equity markets, we have massive fiscal stimulus, massive monetary stimulus, and we have economic recovery that is above 6% in terms of growth this year.
Right.
So this is very inflationary, and that can start to negatively impact consumer sentiment.
Yeah, Susan, because you don't see it in the markets yet, do you? This panic.
Yeah, well, you know what they say about bull markets, though, Neil? It doesn't die of old age.
Right.
It dies because of unforeseen events like COVID and also policy mistakes. And, as Catherine said, we could be seeing that from the Fed. I mean, what do you do when inflation is so high? However, you still have lagging employment growth. I mean, that's
You're
a tough position to be in.
Yeah, I think everyone has a number in the back of their head about that will stop buying something. For me, ring-dings, they get up to $50, game over. I'm not buying ring-dings.
Okay.
But until then, guys, thank you both very, very much.